Good morning, warriors. Welcome to FACE. Let's have a great week. How's everyone doing today? Hope everyone had a great weekend, recharged, and ready to go. I just want to do a quick little primer on triangles. I have a couple of live examples. Hello, David, that I'm paying attention to. First one is in US dollar yen. To me, it looks like we're developing an ascending triangle. So what do you do here? You could basically do nothing because maybe we're going to fill it out one more time. Could also be maybe we get a right shoulder, call this a left triangle. Sometimes have head and shoulders formations within them. This being an ascending triangle, this line I just drew, I eyeballed it, thinking that we could get a pullback back under 106 one more time before the breakout. So getting long here, you have a lot of risk because you'd have to risk this. You could either wait for the breakout because closes back over this 107 level. So 200 pip formation would take us back to major resistance at 109. Everyone see that? Good night too, yes, depending upon where you are on the globe, soon be. Where are you? You up late, 2 in the morning, 3 in the morning, looking for a trade? If you find yourself scan Indonesia, okay, find yourself scanning 20 pairs looking for something, go to bed because the great trades will hit you right in the face. So this is your example of an ascending triangle. I'm a little aggravated. I was short gold and silver last week, thought I'd have another chance this week, and saw it come in gold about 3 lower, and I didn't do anything about it. Potential is that, you know, we're going to correct back down towards this throwover line. This was kind of a wedge line, 3 drive line here. And I was thinking that we could get a pretty good break. This was $55. So I thought we might get an irregular ABC where this was A, and we still could. And this is A, B, and we get a C for B, in irregular at new highs. I'm going to short it. As you can see, we have 2 drives here, 1, 2. You know, you don't always get 3, so we'll see. You know, I miss trades every day. I teach people not to be aggravated about it, so do what I say, not what I do. But that's a situation there. Same in silver, kind of a rollover. Silver is, they're both down about the same amount, 1.2% in silver. Until we get up here in the gold-silver ratio, silver is still the preferred short. Steve showed, you know, maybe we would get a C back up to 90, 91 on the gold-silver ratio. Getting back to triangles, well, I think that there's a chance that gold breaks all the way back down to here. I have some confluence here in gold down at this 1450 range. I have the moving average here. I have a speed line here. So that's what I'm looking for. Does it do it from here? Or do we get one more shot up towards 1540 or so? That's the question I have. But I do think that we could pull back to 1450, which is still $80 above the breakout, right? The breakout was all the way back down here. On the weekly, you could see it better right here. So, you know, I think eventually, you know, we're going to get back down here. But this was your breakout, 1365, 1370. So that wouldn't even threaten it, that target that I mentioned at 1450. But I come up with that by saying this was a $55 break, and we get 1.618 of this from wherever the high is. So if the high is here, you're even talking 1440-ish down here in gold. But there might be one more good rally to sell because, you know, the yen isn't up tremendously. And if we get one more dip in the yen, maybe gold pops. So here's your ascending triangle. example. And you know how a lot of Ellioticians and a lot of crude bears came up with like a 34 target for crude oil. And, you know, I'm more of a classic type of technician. And now I could finally see how they come up with it, because here's an example of a descending triangle. So the yen was opposite ascending, implying a move to the upside, crude being descending. So if you just take it from 66 to 50, you have a $16 formation here. So back under 50 and a half takes you down to 34, which I think is, Greg has a long-term target there. Peter Goodburn has a long-term target there. So similar to the yen, we'd be better off trying to short it if it made one more attempt up towards 58, because closing back above 58 negates this descending triangle. Or again, just like the yen, you know, if you sell it here, you're going to get an edge into the breakdown. But what if, you know, you have to risk 58.5 from here? That's a big risk on a crude trade. Or you could just tighten it up and probe and protect and get out of the way back over 56. But breakdown under this level portends a pretty big break. In fact, so you look at this, there have been some nice waves to catch, especially this and then this. But since then, you really haven't missed anything in crude, and you won't miss anything in crude until we take this out, and then it should become pretty directional. So this $50 range descending triangle line looks to be key to me. Okay, hello, Alina. DJ, how you doing? You know, I'm not gonna. It's tough enough to predict price, let alone when, the time. So I don't do a lot of time projections. Sometimes I'll project off some type of channel line and look at where it would come in at what time, but tough enough just to predict direction, let alone when a market's going to get to a certain price, zombie. In my extremely accurate and humble opinion, I'm not W.D. Gann. So W.D. Gann will say gold will be at 14.15 on the 22nd of August at 9:31 a.m. I can't do that. Okay. So looking at the dollar, playing around with this 61.8 level up here. I know some people that think we're just going to blow to new highs here. You know, as long as the euro's outperforming the pound, which it is today after having a big week on the short side of EG, is possible. This is just, you know, a shot selling this as a failing rally that perhaps we could trade back down to 95.21. And if this happens, we should get one more good rally in gold and commodities, don't you think? So eyeballing yen, I think we're going to make one more trip down here. I was tempted to short it because I want to buy it down here. But I used to do that all the time and go, well, Dale, if you think you could buy it down here at 5.5, why not short it and ride it down here? Well, that's not the trade. The trade is to be long on a break that may or may not happen, or be long on a breakout that may or may not happen. Not to be short here just so I could, you know, try and make some money in case it pulls back here. Anyone else ever do that? You think the market's going to either rally or pull back to an area that you want to take a position on, and you say to yourself, well, you know, I may as well buy it or sell it until it gets to that area, right? Okay, so don't do that anymore. I'm not saying I don't fall prey to it, but don't do it anymore. Okay, you promise me? Okay. So S&Ps are giving some of the bears heartburn here. I guess the question is, and something I talked about, is maybe we take out the stops over 29.40 first. And then Steve said if we get back above 29.60, might be worth a short here. We got through 29.60. We have new highs coming. So we'll see. maybe we get a pullback first with the yen, but I think they may gun for these stops up here at 29.40. It kind of pat at 61.8. Everyone's, this was 61.8 here at 29.40. There's been a couple of attempts. Maybe I would say there's at least 5-10 buy stops over 29.43. Let's see if they go for them this week. And I think that's about all I have for the opening. It was an opening about triangles. Remember, ascending triangle working in US dollar yen, descending triangle working in the WTI crude oil market. And now I'm going to turn it over to Blake. And
you sound so much better today. It sounds like your mouth is feeling better. You're talking your ass off right now.
Oh yeah, a little okay, yeah, a little better, bro. I think it's about 2 weeks, but yeah, at least.
No, it sounds like
I'm not in pain better. Like I was for like all of last week. It was pain all day, all night. But so now I have a little relief, and
oh, that's good.
Yeah, thanks for asking. I'll show you my Hollywood smile.
Oh my gosh, I bet it's like just glowing.
Not yet, no.
No,
but they're natural. They're natural, so.
Oh, it's all right.
Yeah.
You know what? So they pulled some elephant tusks out, reshaped them, threw them in your mouth. That's what happened.
The ivory hunters.
Yeah, that's great. Remember when it was a thing to have a tusk? Back in the back in the 70s. I mean, we had like we didn't have a real one. My dad was in the military. I met my mother in Taiwan, and he came back from Taiwan with this fake elephant tusk that was I think it was fake. I hope it was fake. But it's like, remember that was a thing back in the 70s? Like, everybody had an elephant tusk.
There were a lot of things that were accepted in the 70s.
Yeah, that's
we can't do anymore.
This is a good point. This is a great point. And
if you can remember the 70s, you weren't having enough fun. How about that?
That's what they tell me. Tell me. I was too young at that point, but that's from the people that really quote unquote lived through the 70s. That's probably very true.
So it's still kind of dead action in the majors.
Yeah, it's pretty slow. We've had a nice rally in risk, and S&Ps are coming up right into what I consider my sell zone. Let me go ahead and show the charts here. I'm actually looking to be a seller of the S&P as we approach these levels. So, I'm looking at that 29.30, 29.40 level as an area to be on this short side. Excuse me. I talked about this on the week ahead video that we could look for a rally towards. We closed at 29.90, and I was looking for a 30 to 40 point rally, and here we are. I thought risk would improve today, and we have, and we're at levels where I think that the market might find itself a little frothy. I think we are in August, and remember we have the Jackson Hole Symposium this week. Yeah, so that's on starts Thursday. Or it actually starts Friday, but everybody we'll start getting comments Thursday, Friday, Saturday from like some of the more influential people, and so
Blake, a lot of people think no major tops or bottoms happen in August, but I can remember a couple. 1982 in August was the beginning of the bull market. With the Dow trading 760. I remember because I was short IBM down there at that time. And someone once told me, someone I interviewed said the high in 1929 was in August. So, people poo-poo August is not, it's not an important month because everyone's in the Hamptons, but history says otherwise.
Yeah, that's, first of all, I want to say that's amazing. You can remember 1982. It's so impressive. I really, there's a few trades that stick out in my mind over the years.
Yeah.
But they're really exaggerated, most of the blow off tops, or the, I can think about where those lows were, formed, or the highs were formed in certain markets. But man, pulling out some trades like that, you do truly have a photographic memory. I mean, Stelios, I mean, am I the only one like that? Maybe it's because I trade so much. I don't know.
I forget a lot of stuff. Dale is exceptional in this.
Well, I was the wrong way, so you always remember things a little bit more when you were the wrong way on
True.
something at a major turn,
True.
So that you learn from that. So I remember being short IBM at the bottom, August 22nd, 1982.
August 22nd.
Yeah,
that's a great day.
Yeah. So that here we're coming up to an anniversary date of that was the beginning of this grand super cycle. So 1982, we're talking about what, 37 years ago.
Wow, that's crazy. That's crazy.
So maybe we put in an important high 37 years later.
Forex Gal said Dale's like an elephant.
Yeah, tusk. They removed the tusk, and
it's pretty, yes, exactly. All right, hey, Stelios, I wanted to say good morning, really quick, and I wanted to see if there's anything that you wanted to talk about today. I mean, we had this, we saw some news come out of Europe, and because I want to go through the majors really quick before Paulie's going to get here the last 15 minutes. Today is my oldest son's 15th birthday, so I've got to get up and make get him up and make some pancakes this morning. We're going to get him up a little early. And
happy birthday!
Oh, thank you. Yeah, it's his 15th birthday. I'm actually tomorrow. I'm taking him out to drive for the first time.
To drive? Oh, wow.
Yep. Nice. Well, obviously we're going into an empty parking lot, and I'll be starting off today and or tomorrow and Thursday. So yeah, it's big stuff coming. But there's some things that happen in Europe overnight, Germany's talking stimulus. So what's all happening there?
Yeah, I mean, there's been a rumor for quite some time, and because German data has been very disappointing over the past few weeks or months, and it's now becoming a little bit more real, let's say. What was the number, actually? I can't remember the number. It was certainly small. It's something like, the rumor was something like 50 billion or so.
Yeah, no, 500 billion.
Wasn't 500?
Yeah, 500 billion in a $4 trillion economy. It's like,
okay. I misread it then.
Yeah, wait, hold on. I got a text on it. Hold on. I'll tell you exactly how much it was. It was.
There you go. It says could spend extra 55 billion. That's a number I saw, and I thought, this is really not that much.
Is it 55 billion? Is that what all it was?
That's what it says on the third line. That's what I read as well. Maybe I missed something else, but anyway, I think the bottom line is the Germans and Angela Merkel had been pretty adamant about stimulus, about actually not not providing any stimulus, and but I think the economy and the world economy and the German economy in particular is not doing well. So it's going to be justified. We also had the Euro CPI, excuse me, CPI came in at 1% year on year. That's well below the 2% target. And this, I think, will open up things and give Draghi and his successor more flexibility to go on with some more easing. We're having that in Europe. We also had something interesting in Italy where, excuse me, I don't know what's wrong with my throat. Salvini is trying to push out basically Prime Minister Conte, and he's he's been an unpredictable person from day one, and there is the possibility of a snap election coming up. It's all happening in Italy. I don't know what I'm not Italian, but the situation seems very fluid, so we could expect something out of Italy any day in terms of political developments. And the other thing on the Euro side is, well, Brexit again. We're having more developments, and Boris Johnson is clearly saying over and over again that the UK will leave the Eurozone on the 31st of October. I think there is no doubt about that at the moment.
It's going to be a hella Halloween. I'm really actually kind of,
yes.
I'm a little irritated with this because I usually like to enjoy Halloween. The Halloween, we go trick or treating, and it's going to be a crap show. I might not even get to take my kids trick or treating this year.
Yeah, I personally, that's a shame, but I personally thought up until a few weeks ago that the chance of another extension was high. Now I think it's very low because it's been, Boris Johnson has been adamant from the day he took over, the UK is leaving on the 31st of October. And this strategy, in my opinion, if the EU were ever going to make any kind of compromise, this is the way to do it, I think, because they're showing them, look, guys, we're out. If you want to make some kind of a deal, good or bad, it doesn't matter. You're going to have to do it before because, you know, we're leaving, end of story. And anybody who says that the Eurozone will not suffer when the UK goes is, I think is a little bit, can I say crazy? Yeah, crazy. So I think it's going to be tough for both sides. Obviously for the UK, it's going to be tougher, but the Europeans, I'm sure they do not want to have a no-deal Brexit. I mean, they cannot want that.
Yeah,
so,
no, yeah.
So we're moving forward with that. Boris Johnson is supposed to be meeting with Macron and Merkel this week. And then we have Jackson Hole afterwards. So there's going to be a lot of stuff happening. We have the FOMC minutes on Wednesday. I think we should be ready for quite a few tape bombs. I think they're coming.
Okay, well, I appreciate that. I was going to go through. The majors and do the bias chart for everybody here before Paul Franco gets here. But there's a lot of comments about gold, and if you listen to the week ahead video, as I mentioned, I was looking for a pullback in gold. I thought gold was a good short going into the beginning of this week. I personally, whoops, that's silver. I personally would love to see gold at 1480, and I think it's possible. I am a buyer on dips, though. I don't want you guys to, and this is something that Dale was just saying, and this is something I think I tried to hit this. I tried to really accentuate this topic last week about gold and about trading in general. Look, when I have a bias, I have a long bias in gold. I want to be a buyer of dips. And just so you know, I did short gold last week. I shorted it like 15, or excuse me, like 15.15 or 15.22 or something, and I made a few bucks. But I'm usually not a counter trend trader, and I'll do it from time to time, but I have a hard time doing it, and I'm usually really quick about it. But overall, I'm looking at this consolidation in gold, and I'm looking at a 6-year consolidation, and I'm looking for it to actually extend, up to the 78% retracement, up to 1700 eventually. Therefore, I am actually looking to buy dips. Now, does that mean, you can short, you can take some shorts going the opposite direction? You can, but I'll tell you this much. I'm more comfortable buying dips in gold than I am being short. So for me, I'm looking for a dip towards 1480, maybe 1460. To get long, and really, if you just look like a 4-hour chart, I think this will be a better way to to help gauge that. If you just draw a fib from like this last move lower to the highs here, let's do that, and let me change this over. So I mean, you're talking maybe a dip to 1467, maybe 1450. Something like this, I'd be really happy to see us dip to, because I would like to be long down there for an eventual break above 1435. But we don't know. I mean, the dips may be like this last dip. It held the 38% retracement. We could maybe just dip to 1485, and that might even be it. And we might not get much more than that if this bullish trend is really set to continue, which personally I think it is. So I'm still looking to buy dips in gold, and if you missed selling it up at 1520, to sell it right now where it's at 1498, there's a lot of buyers around here. They're looking at these prices below 1500 and they're buying them. So, and that probably goes the same for silver. How Stelios, how do you feel about gold and silver right now?
Well, I think they're still bullish because we remain outside of the breakout point in gold. For the people who have been following me in the chat room, remember I had some silver longs. I took them off, all of them, the last piece last week, and I said,
great trade, by the way.
Well, lucky, good. I don't know what you want to call it, but it worked out well. And I said I want to see a dip in both to rebuy. I have a feeling that gold might even try to retest the breakout point. Might go down, another.
You said 1380?
You know what? It depends on the Fed. It depends on a lot of things. If the Fed does not, remember the last meeting, we're going to have the minutes on Wednesday.
Yeah.
They talked about a change, an adjustment to the policy. So if they continue with this this rhetoric that the cut was just an adjustment, then the market's going to reprice. And I think we're going to take away a couple of those 4 cuts that we're pricing. If that happens, then gold's going to get smashed as it usually does. So I think there is a small chance. I give it a 10-15% chance we might revisit the breakout point. If we do, I'm going to get long again.
Oh my gosh, I would love to be long at 1380. Love it.
Yes.
I mean, dude, awesome.
And I'm looking for a little bit lower in silver, probably another 20 cents or so, and I'm going to start scaling in longs again.
Okay. All right. Well, fair enough. All right. Well, thanks, Stelios. And I'm going to go ahead and go through the majors really quick, and I want to get them up on the bias chart just so you guys have this. And just so you guys know, Steve is actually traveling today. He's heading back to Athens. He'll be with us again tomorrow. So this is going to be, with me, this is going to be the last day that we do the bias chart together. But don't forget, if you are a ForexAnalytix subscriber, Paul Franco, who will be on in the next 25 minutes or so, he does the bias chart every morning on the European crossover. You do have to be a ForexAnalytix subscriber to log in, but you can log in right here at the very top of the of ForexAnalytix when that broadcast is going on. So let's talk about the majors here. And thanks, Stelios, for your commentary. And I'm looking at the euro. We had obviously some positive news. I really am looking at the euro as a possible long above this 111.20. So you can see the spike high right here comes in around 111.20. We're struggling as we approach it. This is an inverted head and shoulder pattern right now, the way that I'm looking at it intraday. We're out of this down channel. So as long as we stay above, what is this, 110.87, I'll just write down 110.85 intraday, 110.85, and resistance at 111.20. If we break that this morning or today, and this is I'm going to keep it a range bias. And by the way, it's going to be a range bias while we're in here. Actually, probably while we're in, all the way up to, we could get all the way up to 113 and it'd still be a range, because this is just, think about this longer term, descending wedge. We're just in a range here. But intraday, we get above 111.20. I mean, if you look at the targets, that could take us to roughly, take us right down to this breakdown point, which would be right around here, around 111.60. So we can get a nice, 50 pip pop, above here if it does happen. So I think you should keep an eye on that intraday. Cable. I'm a little worried about the pound. The pound does look weak. Again, we're struggling at this. I drew this out last week, so it's just not new. We have this big resistance zone that comes through here around the 122 level. We're just struggling. We came out of this down channel and we can't make any headway. So as I pointed out on the week ahead video, I think that the risks are to the downside, and they are, unless we start taking out some of this resistance up here, that you're going to have sellers on rallies, and that's exactly what we're seeing right now. So resistance today, I'm going to write down 121.85 just in case it gets some sort of lift up there. Actually, you know what? I'm just going to put 122. Just, and we are still in a bearish trend. Okay. Now support, it's a tricky one. You see how we took out this little minor trend line, but I would actually do this, probably be more significant, is you can see how it intersects with these lows. So that's going to be around, let's call it 120.75. That's support. Not great support, but it is support. All right, let's go take a look at the Aussie. Here's your Aussie, very tight, very, very tight range. And we're in the apex of this triangle. Sucker could break out at any moment. All right, so resistance coming in at 68 cents, support at 67.65. So just wait for a breakout here. I mean, it's in a bearish trend, by the way, but I'm just saying, if you really want to trade this, the Aussie, wait for that, or wait for that. And it's pretty simple. Just got to be patient. No sense in trying to figure it out. And I know it's going to break higher. I know it's going to break lower. It's just it's trading heavy. Kiwi, same analysis as last week, really, but there's no reason to be long the Kiwi while we're below this red line, which comes in at 65 cents. However, we're capped right now by this little downtrend line that comes in at 64. Now it's 64.30. Okay. Oops, didn't want to do that. 0.6430. We are in a bearish trend. And support, well, I mean, right now there's some very minor support at 64 cents, but the spike low comes in at 63.75. So bearish. All right, dollar Canadian. Still not super excited about this. If you use ForexAnalytix, like this morning's update, dollar Canadian came down to channel support despite the break to new lows intraday, which may offer support at this 132.50 level. That was an hour ago. It was right down here, and then we popped up because this is support 132.50. All right, so 132.50. Okay, resistance for the dollar CAD probably up here intraday. Say roughly 32.85, and it is range bound. There is nothing to do with the dollar Canadian. Nothing to do. But I want to show you guys something though, really quick. And this is not with the bias chart, but I've been focused on the New Zealand Canadian the last few weeks. I have not. I traded a few times. I actually bought it down here at 85.30. I think I sold it at 85.40 or something. I just I kind of got in and got out. But the reason why I was buying the dollar or the New Zealand Canadian last week. And then I traded this move up here. I actually made some pretty good money as we came out of this descending wedge. It was actually one of the trades that really that put my P&L profitable for the month earlier this month was this trade right here. But I was focused on this longer term. Take a look at this. This is a weekly trend line in the New Zealand Canadian. Okay, I was really focused on that trend line coming out of that descending wedge. Last week, we came down and retested that trend line. So I bought it and then I got out of it. I scratched it. I made a few pips and I said, nah, I just don't want to deal with it. But I'm really focused on it right now because the New Zealand Canadian, if this thing breaks down, this thing gets a significant breakdown below like this, 84, 85 level, which is just below 85 cents. I mean, that could be extremely deadly for the New Zealand Canadian. I mean, this currency pair could really take a 200-300 pip tumble, but at the same time that could weaken the USD Canadian as well. So it's just something to think about if you're trading the dollar Canadian. Kind of keep an eye on this pair. All right, I'm going to go back to the bias chart. So the Swissy. Here's the dollar Swiss, and you know what? I did this weekend's week ahead video. I did it twice, just so you know. I did it the first time, my volume didn't work, so I filmed the whole thing. And I went back and listened to it. I'm like, damn it, the volume. I did this Windows update, and it kind of redirected all of my sound where it was going. So I filmed it again, and then I handed it off to our editor, and then I can't remember if I talked about the dollar Swiss on the second video, but the point I was trying to make here, and I'll just kind of tell you guys, as long as we trade above this red trend line here, there's no reason to be bearish. And this Nitish from our chat room, who's in Singapore, he pointed this out last week, and then I did it, or I put it up as the chart of the day. But if we break below this uptrend line, that's going to signal to me a lot that we're going to have probably some risk off coming through the market. And right now, hold on really fast. Let me do something just really quickly. Sorry, I just had to do something really fast. If we break through this, that would signal that there's going to be some risk off in the markets. But while we're above this trend line, there's no reason to be real, super bearish here. But if you take the Swissy right now, we are capped and have been capped by this breakdown point. But I would be more concerned with like this 50% retracement here at 98.18. So that's going to be the resistance I'm writing down today. 98.18. I think we're in a range. Support holding really well right through here, which comes in at 97.73. Or you can actually roughly put 97.75, but it's 97.73. I'll just put it right there like that. All right, let's talk about the dollar yen. Dollar yen. This is almost the exact same chart as the S&P. If you guys haven't seen it, here's the dollar yen. Here's the S&P, and this is the same. See this trend line right here? That one right there. Okay. Here's the dollar yen. Same trend line right through here. Okay. So that means that we're going to have probably key resistance right here, which is at 106.80. Just some heads up for this morning. 106.80. We're in a bit of a range, so support this minor uptrend line here. So support's going to be at 106.40 for now. Not too excited about the dollar yen at the moment. I just want to, want you guys to know that I think that we're, kind of boxed in here, and I think that resistance is going to be kind of significant today. Let's take a look at the dollar index. Here's the Dixie. The Dixie, this resistance right here. Whoops, I didn't mean to move that whole thing. I was going to move the whole thing like that. I was really looking at these levels at 98.40 as being pretty important. I was looking at this ascending wedge, but it looks like it's not. It's kind of irrelevant because we didn't get a reaction coming out of it. So 98.40 is probably going to be some decent resistance. It's in between fibs, so I don't know how terribly excited I am about it. I'm kind of thinking that red candle right here was a total this might have been an adjustment from the dollar index contracts, so maybe that's more significant. This is the 618 then that seems to be relevant, but I'm going to write down 98.40 as resistance. We're definitely in a range. Support is going to be, while we're above here, I don't think there's any reason to be bearish the dollar yet. But a break below that little area, the reason why I'm gonna highlight it is because if we break through this level, that means we're starting to make lower lows. So, you know, we'll break through these lows right through here. So that comes in at 98.04. Again, these are some really tight ranges, but it's August and the fireworks are probably coming at the end of the week, I would think, not necessarily right now. So let's keep that in mind. All right, so let's take a look at the peso. Now, I love the dollar Mexican peso. I think it's a great long. Does that mean I'm going to buy it right now? No, not necessarily, but we have this really nice cup and handle setting up. Now, it's messy as all get out, but it's whenever I look at a chart pattern, one thing that I do, you know, when you're looking at something and you blur your eyesight, you know, when you're looking at it and you purposely make your vision blurry. Sometimes I'll do that with a chart. If I'll look at a chart and just kind of blur it out. And the reason why I do that is because then it kind of mutes all this noise. But if you look at the formation in general, this looks like a cup and handle formation. And what's really significant though, what's really significant is all these spikes right into 1977. Remember, Banxico did cut rates, so that is going to keep the peso just kind of on the defensive moving forward. So 1977, that is significant resistance. And we may be range bound right now, but it's threatening to turn bullish. Okay, we're range bound at the moment, but the risk is starting to build that this thing's going to move higher. Support, I think you can look at it like this intraday. Any move down here is going to find trendline support, and that's going to be near that spike low. So 1960 is going to be key support on dips. Okay. Let me do the Swedish krona, Norwegian krona really quick, and I'll be wrapped up for you. So here's the Swedish krona. Very, very bullish look because we're just holding up against the highs. This is another one where you could probably almost look at this as a cup and handle pattern. But that is just really key, right? At 970, it's key. 9.7000. That's key. And I would argue that it's bullish. We're just continuously trending higher. Support, still this level right here. Comes in at 9.50. No reason to be bearish that right now. No reason. And last but not least, let's take a look at the US dollar Norwegian krona. I shorted this twice last week at 901 actually, and Friday was the last time I shorted it, and I got in and out of it. I didn't take it home over the weekend. I think I got out for I closed it like 899 something, so I barely made any money. However, the reason why was the 161% extension of this move. We were very divergent on relative strength. So I think any move now up towards 904 is a sell. It would be counter trend. Okay. I think it is still bullish. The trend is bullish, but that doesn't mean, you know, I think it's going up all the time. I just think that the trend right now in the US dollar Norwegian krona is bullish. Support intraday, probably right through here, somewhere right through here. You can see the spike lows from last week. Came in right through here. So that support will be 890. Yeah, I think we had 892 written, but it'll probably be more like 894. Okay. and this would be your bias chart, 8.9400. And, again, I'm going to reiterate that this will be the last time I do the bias chart with you guys, probably for a while, because Steve's going to be back, and I'm going to be passing the baton over to Steve throughout, in the mornings. But the bias chart is a great way for you guys to, do your analysis, put down all the support and resistance levels and what the predominant trend is in front of you. So this way you have all this information in front of you while you're trading. Paul Franco does the bias chart not only for the major currencies, but he also adds in the S&Ps, gold, and everything else every day on the European crossover. And I wanted to bring Paul in so he could kind of go over some of the charts that he found were important over the weekend and through European trading today. So good morning, Paul. Is Paul here? Is he even here? See if he is here. He is here, but he is not unmuted. Coach. Stelios. Anybody?
Hey, sorry, I was away for a second.
Okay. Hey. Oh, I was like, am I just talking to myself? But Paul's here. He's here twice, but I don't hear him yet. He hasn't unmuted himself. And we're going to bring Paul in for a few minutes, but let's see if he is here.
I see him here.
Oh, he just disconnected. He disconnected one of his connections. So Paul says he is here, but let's see this. Unmute.
Okay, can you hear me?
Hey, oh, you can. Yes. What's happening, Paul?
Hey, not much. How you doing? It's super dead trading. I mean, it's August. What can you say?
It is. It's very, very dead, slow markets. But I wanted to bring you in for the last few minutes, so maybe you can explain to the folks what you do and talk about some of the charts that you've seen, over that might have caught your eye, and then you can tell people how they can get involved with the European crossover and also the daily roundup webinar that you do every single day for everybody.
Yeah, the daily roundup is available 12:30 Eastern. It's just a real quick recap of FX, whether it be across the majors, which you can see on the screen now, or sometimes we'll touch the cross rates. I mean, everything across the board is relatively quiet, to say the least. Not a whole lot, and the euro's kind of hanging on just barely here. We actually talked about it on Friday when I stepped in and did a little bit of face. I thought it was a good area down here. Remember, we went down there to 1075. I thought I was saying I think it's okay. It's okay here. I think we can bounce, but it's kind of funny because my bias chart resistance is where you were talking about. Remember, 1160. I think that's as good as it can get on the bounce back, because overall, and I'll do a little recap on that. Overall, I mean, it knocked a lot of people out of the box that thought that we were going to want to get that breakout from the prior week. And so now we're back to really a bearish tilt on this. But I think we can get a bounce back, like you said, going into Jackson Hole. The dollar, I think, will be on the defensive, and we'll probably come up to around this 1160-ish area for a bounce back. And I think at that point, anybody that's long will probably look to exit. And unless we get, like you said, the fireworks coming from Powell. And to me, I think that he is going to indicate that they are going to be very accommodative. I would think so. We shall see. But then that could kickstart us to another leg up. But for right now, I think the move is from here to 1160, and then that's about it. But if you
I'm your buddy. Blake had to run.
Okay, he already popped out. Oh, okay. Okay, thanks, Dale. So I'll just, I'll do just a real quick recap. Usually what I do with ForexAnalytix also is on the weekend, I'll do some analysis going into the start of the week. So I'll kind of hit that real quick, and then I'll just jump into the cross rates because, like I said, we have a little bit less than 15 minutes. But I put on here, like, after 4, and you can see that certainly here, after 4 straight down days from another failed upside breakout, the euro found support at 1075. We had that marked off from Friday that we're looking into. Found support. Stop losses of long positions intensified the sell-off. Those positions will not come back unless the pair has a daily close above 1178. Resistance will be around 1155. Well, we have our bias chart support resistance today at 1160, and we actually I lowered it here because I said, hey, look, I think that's where eventually we can get to, but for the short haul, let's go with 1125, which we did, / 1160, pretty much close to what Blake has, and I think he meant to reference the 1160 area. But like I said, once we get past Jackson Hole, if Powell seems rather accommodating, then the key will be a daily close above this 1178. If we can do that, then we're back on track for the move higher. It's just a lot of people got flipped out of those positions. It's flipped us back to a bearish mode. And I think one of the guys, Rick, was in the room saying, hey, you know what, the biases are a little bit different from Polly's and Blake's. And mine, although our levels are pretty much set up for the day's scalp resistance areas, the bias I keep for the bias over the course of the few days to a couple of weeks. So certainly the euro flip back to a bearish mode. The only thing is with the support, I did push this down here to 1053 because I think that if we do break lower, I think the euro right now it's in a sell mode. There's no doubt about that. But if we do break lower, I think that's where we'll find the support. I think until we get past this week, we're not going to really know, does the euro make another leg lower, or can the dollar start to pare back a bit from here? And I'll just go and touch on the dollar, and then I'll just move into the cross rates because Blake already touched most of these here, the cross rates. I will say on the dollar yen, I was looking for the dollar yen to move higher, and the reason is that you can see here we broke above this trend line, but we've been holding steady all last week. And right now we have our bias chart resistance. You can see I put mine in the pink lines because to me, if I'm looking across the board and I'm pretty busy and I'm looking at different screens, these bars will jump out real fast to me, and I kind of set them up for the day's high and low that I'm looking for. Now, actually, the dollar yen, I think we can come here, which I thought I was going to do back when we did this one move up here. I thought we'd be able to get above 709 and then maybe up to 720-ish, which was, I think, is going to be the 50% back, if I remember correctly. And I thought that was going to make a good setup for move lower, but we faded and we just never got things going, and the market slipped right back lower again. But we're kind of holding our own here with the dollar yen. I think that if we can break a little bit higher, today's bias chart is actually the 709, but I think that if we do hold our own here with the dollar yen, and that may matriculate later on in the week if Powell ends up being rather dovish, if you want to call it that, then I think we can make a move up to 788 all the way back up here. Because if we break above here, then anyone that was stuck or whatever, the market's not going to just stop at 709 or 720, which was what I was looking for on this move up in here. I thought it was going to be a fantastic short here and let the market come back down. Try to be patient, and sometimes when you're patient, you don't want to chase the market, or jump in so fast. But certainly, I thought the market could have gone beyond the 709, and then it was going to set up for a nice move lower, which it did, but it just came up short. Well, if we come up here now, 710 and 720 is not going to hold this market. If we are able to get past here, we're going to 788. That's my thought before the market takes its own little pause. But we shall see how that plays itself out. Pretty much in accord with Blake as far as the cash dollar index here. And same thing, like I told you, I do like a little bit of a little analysis blurb at the start of the week, and then during the European crossover, we then have our reasons why we're moving the bias chart or the levels up and down throughout the week. And like I said, pretty much our analysis is set up for scalp trades or short-term trades. As I always say, the traders in the room, a lot of different perspectives. Some are very, very short-term traders, some a little bit longer, and some are swing traders like Amanda. But they'll use the bias chart that we do in the European crossover basically to line up with their own trades that they're looking at to come or enter a market. So in the cash dollar index, we're just talking about, and like I said, it's very quiet August trading. But I said the dollar index has reestablished its upside momentum over the past week. Friday's range was tight, suggesting a pullback may be in the offing with dips to 97.60 to be bought. Immediate resistance is 98.56. And you can see right here, we have the little pink line here. Once again, same thing. If I'm looking across the board and pretty busy and I see, the market violating or coming up to a line here, it stands out a lot cleaner, for me. Henceforth, that's why I have that here. But on the pullback, like I said up to 97.60. But today's bias chart support's going to be at 97.85. Right now, we're kind of dithering around here, but certainly you can see here with the exponential moving averages, and sometimes I don't even use them to the extent that I should, because one of the things, at least if nothing else, the exponential moving averages keep myself out of trouble. And what I mean by that is you can see here that this dollar index, even on that dramatic pullback, continued to remain in a buy mode. So, lots of times I myself, like you mentioned at the beginning of the show, you said something about don't do that. And I myself have caught myself, selling near a low. And if I just keep my eye on the exponential moving average right here, that would keep me from doing that. And so I still make those same stupid mistakes, not paying attention. And one of the reasons I keep that bias chart, the exponential moving averages, is because they kind of keep me in check because quite often I dart in and out of the market. And maybe when I'm coming in at a certain level, the risk reward is simply not very good, and that'll kind of keep me in check. Unfortunately, I don't follow it as much as I should, but I do keep it there, and it keeps, like I said, it tells me where the market is still on the overall medium picture is still holding up. You can see here this dip in the dollar yen. Matter of fact, a lot of people wanted to get short. Well, if you look here with the exponential moving average, look at that. It kept me from getting short down here. You see what I'm saying? A lot of people are saying, oh, we're going to break here. And you can see here, the exponential moving average kissed right there, but it continued to remain in a buy mode here on the short term for the dollar yen. Now, I didn't do anything because I haven't done anything with the dollar yen lately. I think after this fall, I think I might have caught one little trade in here. I don't remember what it was here. I mean, it was very, very small. But I haven't done it. Oh, actually, I'm talking about from here. But I haven't done anything. But like I said, it kept me from stepping in on the short side and chasing this thing. But that's where the exponential moving average will help you if you use that, in accordance or in conjunction with your own trading. We're almost out of time, so let me just go and flip in here real quickly to the cross rates. A lot of traders don't get a chance to see the cross rates. As I mentioned, boy, these things move like gangbusters. I'll tell you what, August trading or no August trading, you see some pretty good moves. And, anyone can grab one mark and say, wow, that was a big one. But you do see some huge moves in the cross rates, whether it's Euro, Kiwi, Euro, Aussie. Obviously, the guppy has been a big mover, and I'll take a look at this real quick. Now, we've had a nice little bounce back, but we know we've been into a little bit of, look at this guppy's falling like nobody's business. But I put on here, the question is, where's the bottom? The major support level comes in at 23.27, but ahead of that, we have a value level of 26.54. We actually, in the room, this was the bias chart support coming into this pair earlier last week. And then actually, we had 26.54, and all I do is my analysis. I seen it sound like a mom say a broken record, but people always ask, why don't you put the high, the resistance at the high or the low? And I always say, how many people bought the low, how many people bought the high? But I put them across the touches because that's where the volume is. And so on this day when it actually set a low, and we've actually rallied, 300 pips off of that. The low was, I think it was 26.56. So it was off like a pip and a half. But my point being is that I put my resistance levels along the bodies or where the most touches are, because that's where the volume is. But if we take a look here with the guppy on a 2-hour chart, you can see here I had the pink lines where they kind of show where the day's resistance and support is. You can see we've had a nice little run up here, but the market has run out of gas, and we're kind of weakening. It's relatively quiet for the sterling pairs. The cable seems to be a little bit under more pressure than the other sterling pairs. But you see some, as you yourself know, we see some pretty big wicked moves here when it comes to the cross rates in here. And a lot of people.
What a technical pearl that was, Paulie, putting your lines where through wicks where the volume is, because that's where people vote with their wallet.
You're right, Dale. You said it right there because I tell people is that, and for those that trade, because here with FX, it's a little bit different. Unlike the futures markets, where you see a lot of guys using the volume charts, and they have. Well, I'm not going to go into that, but I'm just saying is there are some excellent opportunities when you go in and use that, and they use it intraday. But anyway, that being said. That's what I do here in FX because it gives me that opportunity, even though we don't have the same opportunity in FX, unlike unless you're trading the currency futures, but that's still going to be a small amount compared to what the bigger scope is. But what, as I mentioned, is this really helps when you can do it across those touches and you can see the actual volume coming in or make a determination based on that using that with FX by doing it across, like you said, the body touches, because you're right, that's where they vote. I tell people the reason the bodies are so important because I say that's put up or shut up time, whether it's on an hourly or to daily or weekly,
Yeah.
you see it at the time of the weekly. Some people on the wrong side of the market, they got to bail. So on Friday, we get like 50 pips, used to call it the Friday flows. People have to, like you said, they have to get out. So, or if you're looking on an hourly chart, it's put up or shut up time. You'll see a lot of markets when you're pushing to a new high as you're going into the close of an hour, you can actually ride it and it'll actually be forcing these people out of their position, and I'll be doggone at the top of the hour. There's the close, and then we just start pairing back because they got the people.
I think that's the basis behind Renko charts, Paulie. They don't use wicks on Renko. I think that's because they're just boxes and based more on volume, and the wicks don't really come into play. So, for everyone who thinks you have to trade the wicks, Paulie's doing this and it's working, and you don't fix what's working. And you know what? He just gave you something for you to experiment with in your own trading. So that was very good mentoring, Paulie.
Well, thank you, and thank you very much for giving me a couple minutes. I want to cover so Mike could have his birthday with his son's pancakes for him. So it's time for your guest. I'll go and jump out of here, but I will be available at 12:30 Eastern when we cover the daily roundup.
Okay, I like your analysis in the end too. I don't think two knocks on the door you could ignore something, but the third knock on the door in the end at that level, I agree with you. It'll blow through it.
Yeah, so, you can see it right here trying to, it's coming up here, and I don't think
it's like, what's the market going to make it that easy for you? Oh, you missed the first two attempts at resistance.
Yeah, exactly.
We'll give you what, you know what? You're such a nice guy.
Yeah,
we're going to give you another chance.
They won't give you another chance. They'll just get past. I think we're just waiting for, I won't say an event, but we're just waiting right now for the catalyst. That catalyst may not matriculate until the end of the week with Powell, but when we get past here, you're right. The people are saying, well, now I'm going to short it. Well, you know what? Like you said, they don't give you a third chance. They're just going to roll right on over you. Yeah, but have a good rest of the day.
You too, Paulie. Take a look at what yields are doing, and that'll tell you a little something too.
There you go. There you go. Have a good one.
All right, buddy. Thank you so much, Paulie. So everyone, I encourage you to become a member so you could follow Paulie on his European crossover so you're primed for the US Open. And I'm now going to bring Nargis in. So let me just look for her again. I had her here. I guess I have to take the screen first. So stand by, Nargis. No, I need the okay, Nargis. I've now made you a panelist. I'm going to unmute you. Welcome back to Face.
Hi, good morning. Can you hear me?
Yes, loud and clear, 007. How are you, secret agent woman?
I guess I'm doing good. Thanks for asking, and I hope you're. Yeah, I mean, I hear your voice and all that in these things, and looks good. You're doing good, singing and all that.
Oh, you heard that? Okay, I'm sorry. Listen, you can share your screen by just rolling the mouse, and you'll see a green box that'll say share.
Oh yeah, below, right?
Right.
This will stop sharing. Do you want to?
That's okay. Yeah, okay. Go ahead, take it.
Yes, and
pick your screen.
This one, I think this is the correct one. This desktop too. Share. What do you see?
Got
Do you
it.
see my Twitter?
I do. I see
Oh, okay.
Mish. I see Mish, and I see SHF, and God, I don't see
Okay, got it.
Forex Stop Hunter in there at
Okay,
all. But
okay, okay.
it's okay.
Then we are the right
All
screen.
right. Wow.
Yeah,
Okay. Here's
yeah,
my
yeah.
first question for you,
Yes.
Nargis, because I know from watching your Twitter feed and what you put out there that you're a very hardworking person, and you spend a lot of time with your analysis and your trading. How many hours a day do you think you dedicate towards screening, charting, trading markets? How many hours?
Uh, uh, truly speaking, these days I don't spend that much because I'm only tracking the main market.
Okay.
ES SPY, that one.
Yeah. Yeah.
And maybe a few stocks here and there, like, the main stocks, Amazon or Apple, or few others which come into radar, like the ones which I was posting because it's earning season. So some of the things which were already I was going through, like Roku and TTD and those things,
Okay.
because I had identified a pattern in them. So I was just trying to follow through. But mainly these days, I'm only trading XPX, the
Okay.
credit spreads
Oh,
exclusively.
okay.
Yeah.
Okay. All right. So give me a number. 2 hours a day, 4 hours a day,
Oh yeah,
half an hour.
approximately uh, total 2 hours just going through some of my
Okay.
trades as well, and that also, and then posting some stuff and looking at the screen and all that. Because if it's only ES and SPY and XPX, you know where those numbers are. So I, like, in my sleep also those numbers go around in my head. So
Okay. Do you have trading dreams?
I know I have
Do you?
trading. Yeah. All these numbers are like my head is floating, with
Okay.
all these numbers, all
All
the
right. Well,
trades.
my point being, and once you've, made some breakthroughs as a trader,
Yeah.
it doesn't require the same time. But my belief is self-directed plus lazy equals failure.
Yes, definitely.
So, you can't be lazy. You can narrow your focus and therefore there's less time. But I remember spending 8 hours a day
Yes.
trading, analyzing, and you can't learn experience. It only happens with the passing of time, and that's screen time. You have to put in the time.
Yes, I
So
do.
I bet you used to.
No, I even do that now also. Like,
Yeah.
this thing. So the only reason I try to get away from my screen is, number one, to walk
Okay.
instead
Yeah.
of sitting on the chair, and also, like, trying not to become an making it an addiction for me, that, oh my god,
Mm-hmm.
weekend, what am I going to do if I'm not in front of the screen? I'm not seeing those candles. What am I going to do? So
Okay.
but for me, starting from 5 minutes to the monthly chart, I still go and look through it multiple times, so that sometimes there's new revelation when you look it again. Sometimes
Exactly.
you miss something, sometimes a new idea comes through to it. So I
Okay.
still do that.
Okay.
There's no
So
escape to hard work.
we're looking at your S&P chart,
Yeah.
and tell us what you're seeing. Obviously, that's a pretty important support level there that we held, and I see it looks like clouds. So
Yeah.
you have some clouds, and you have fibs.
Yes.
Looks
So
like you
this.
even do fibs on
Oh yeah, my
RSI.
RSI. Yes, that's my one. That's my one go-to favorite thing other than my 10 SMA. So I have this 10 SMA on my chart, and then I generally look at RSI, what it's doing, because sometimes it gives an indication or an idea to what it can do or what can happen sometimes. So
Okay.
in combination with this and the price, sometimes it gives me clues as well.
Is it that lowest, that RSI reading that we had last week, under 30, even though we've recovered from that,
Yeah.
give you any kind of market message that it went all the way down there, that the pressure was at extreme
This
momentum?
6th August you're talking about,
Yeah.
this one?
Mm-hmm.
Yes, it was, because it was a sharp fall.
Mm-hmm.
And plus this one, this particular 6th August, it had poked below this. But the beauty of this is, I just took this, I had seen this swing, and this fell right at 4618.
I saw that. Yeah.
Yeah. So, I
I
mean,
saw you tweet that.
yeah. So, I mean, there is nothing below that. I mean, we, in terms of FIB, we haven't gone below that or seen the into 5 series. So I thought that could be enough, you know,
Right. Right.
for now at least, or a bear flag or something.
Okay. So are you leaning more towards selling rallies maybe at the into the cloud above it? Looks like 2960, 70 or in
Yeah,
that
yeah,
range?
29, 60, 69 is still an, see today, right now when the market is running,
Yeah.
we hit right at 55 EMA and that's where we are stalling. You know, it's,
Uh-huh.
yes, is thinking what it wants to do. So when the market opens, maybe it'll breeze through. There's this is the Bollinger Band, mid band. So
Okay.
until it's trading here, this is still, you know, not so, no, no, you know, this
It could
55
fail
EMA
from
can
here
still,
is what you're
yes,
saying.
55 EMA is can still 29, 25 area.
Okay.
This area is still something. So this is where currently, you know, these green bands, I see the price in. And this is where again it came down. This was a support. And that's when I tweeted that if this low is good and if we do this ABC, we can see a higher pricing into some extensions, you know, into 2900s. So
Okay.
let's see what happens around 25, 20, 29, 25, 44, because 44, this was the
Yeah.
previous resistance. So what it
Think
does
there's
about it,
you think there's at least one or two buy stops above that high?
possible, definitely.
Yeah.
2969 was my earlier number I had printed. So because that was one area it had not touched before, maybe it'll
Right.
go there and touch it. And someone else was printing a higher number than that, 2990, Ben Mendal.
Oh, okay. Okay.
Yeah, because
Maldonado. Yeah.
yes,
Okay.
thank you.
All
So
right.
I had uh, uh, yeah, so I had published this one wild theory, you know, if this low is held, then we can see higher, you know, into those. So he had said that he also sees a similar pattern going into 2990.
Okay.
So
All right.
who knows?
Interesting. You know, I used to trade options, but
Uh,
I was like naive. Okay.
yeah,
I bought them. All right. And really most of the people that make money in options are the house. They sell them, they write
yes.
them. So, tell us a little bit about your strategy in
Yes.
credit spreads. What's the ideal scenario that the market goes nowhere and you just take advantage of time decay?
Yes, that is there. But these days, what I'm doing is XPX expires 3 days in a week: Monday, Wednesday, and Friday. Right?
Okay.
When it's not the monthly expiration, the other weeks are fairly okay. I mean, these days VIX is high, so the chop is like, you know, 100 points up, 100 points down, big candles. So it's a little wild ride. But other than that, you know, today I was just looking what to do with XPX. If it doesn't go above 25 or stalls, I may see where it opens, and I may open a CCS, call credit spread around 29, 45, 50, because we are already 30, 35 points up. So I'll open another, you know, 20 points up. These days, just being a little bit careful, not doing it closer to the price. So I look at 30-minute chart and see, you know, how it is doing. Are we really at up, or, you know, how the momentum is? Then I just take it. And these days, like in the past 2 weeks or so, I'm trying to close it at 50% to 80%. Otherwise, most of the time it expires worthless. Sometimes I take it same day, or sometime I take it, you know, this day when we were talking about, sorry, here, I
Yeah.
had taken a few PCS, put credit spreads. I had taken 4 or 5 put credit spreads at different levels. 28, 15, 28, 20, 35, 40, 50, you know, 5 wide. And by Friday, it was all worthless because we gapped up
Nice.
into 28.90. So, yeah.
Nice.
And yeah.
Okay.
And some
So,
spy calls for 286, and they were nicely up.
okay. So, is this fairly recent development that you started trading credit spreads instead of outright position trading in futures?
I was no, I was doing this before also, but it was less because there were so many stocks also, and you get like, oh my God, this is doing this, this is gapping up, there is news about this. So then I thought this is too much noise, and you can't follow that many stocks.
Yeah.
And then I mean, like a human being or like a stupid person you can call, I still make mistakes about not closing the position outright, or getting greedy, or letting the loss go deeper sometimes.
Okay.
So then I said, okay, I expect this year to be volatile because it's going up, it's going down, and it's too much, So I thought, let me try this XPX, and that has been working very well so far. Just take the credit spread, and then, and most of the time, it either expires worthless, or at least 50% is not a bad profit if you take $2 or $2.5 credit.
No.
Almost ATM.
You annualize that out, it's huge.
Yeah,
so, you're mentoring people. I believe Frisco said that you were teaching him how to trade credit spreads.
Yeah, so actually, I don't know how. Originally, I said, when I started this, a lot of my friends and friends of friends, they started knowing about it, and they said, okay, you teach us, you tell us, or something. So with those friends, I had started a group. Then I became active on Twitter. And a lot of people come and ask me, how do you do this? Your, this and all.
Mm-hmm.
So I was literally, let's say, cornered into opening a chat group. But that's a nice experience, because I learned a lot by the questions, because I put in extra hard work, because I don't want to tell somebody which I'm not convinced of, right? I mean, there is still a chance of being wrong or that thing not working out, but that has made me little disciplined, and also made me a little bit more tolerant, because, people are very happy when they make money. They may not tell you thank you, but if something goes wrong, they'll come after you, right? So,
and that's something.
Yeah, it happens.
Yeah. So yeah, you see the worst side of people when it comes.
Yeah, yes. So, but so far people are all good, and so
just wait.
I know. I mean,
right.
but then,
Amen.
you have to keep faith in humanity that the world is all good. Otherwise,
Amen. So, you're looking at this S&P, and you also, when you're working with people, it makes you more accountable too, doesn't it?
Yes. So that's why, that's why, when we did this trade, I knew that I mean, at least looking at the chart, it said that it wants to move up, but I was like, oh my God, if it doesn't move up and falls below this, then I'm screwed. I said buy 286 calls, and use your stop loss. But then it was good. People made money and they were happy, and
Right.
So
okay.
So far it's good, and it's all free. I'm just giving. I mean, as I said in my first interview, I was more interested in getting the women to look at this, because they have so much expertise and they're doing so much. So why not at least dabble your hands? I mean, you don't have to take care of your portfolio, but know about what's happening in the world by and large, and see why things happen. So a lot of women. Yeah, so a lot of women I have mentored, and they're still there. A lot of my friends, they've started trading, and they started understanding why things happen, or what to look for, and all that stuff like that. A lot of people protected their money when things, somewhere here or here, or here, or here.
Right.
So, yeah. So at least got some good blessings there.
Okay. So S&P's basically credit spreads, and you think there could be, if we get through this 55 moving average, some more upside. Do you see a shot for new highs here?
Actually, that is still a possibility.
Okay.
Because yes, because it is, yes, I do still a possibility, because 3025 3000, sorry, not 3025, that was a GAN number, and we went there, and market reacted here properly.
Yeah, everyone was looking for 30 40 30 50 back there.
Yes,
maybe we're still going there.
Yeah, we can, because see this line, this is 1 2 and maybe the third.
Oh yeah.
Yeah, like generally 1 2 3 boom. So 1 2 3 boom.
Yeah.
That
Threes. Yeah.
yeah, the three reversals. That
Yeah. I think I've heard
this
of
happens.
that, the three
Yes,
drive
yes.
formation somewhere.
This happens all the time.
Okay. All right. So yeah, in the weekly you already have it.
See, the
Yeah.
monthly it already touched,
Monthly.
and that's how it reacted. And
Yeah.
there is a bearish divergence still here. So
Glaring.
yes, so this distance it increased a lot again monthly to 10 SMA. Next candle it reduced that distance, touched it, and then moved up. So this was another reason I was more confident that it should at least bounce back. To correct the
Yeah.
technicals because it touched here. So that's on a monthly chart, that's a big thing.
Okay.
So
All right. So anything besides S&Ps that you wanted to talk about, or continue with S&Ps?
yes, yeah. So I was looking at gold as well. I
Okay.
posted a few of the things regarding gold.
Okay.
And surprisingly, gold was also following. Okay, why doesn't this chart show anything about gold? Okay, yeah, that's fine. I think this trading view must have erased my whatever I must have drawn. But if you see, this is also following all the GAN levels so far. All the numbers I had printed out. 1500, 1521, 1541. Last time it reacted around 1541 and pulled back sharply. So currently, one of the reasons I'm saying that it may pull back also is this weekly RSI 82 plus. That's a lot of pressure on price right now. So
Just
maybe
because it's overextended, but
overextended and reached
no
a level.
If you look at the daily though, you do have glaring divergence on the RSI, don't you?
Yes. So yes, but just some normalization. It hasn't come down to its 21 EMA in a long time. Oh, it did. But the overall bull trend is still intact.
Okay.
Only thing I see is when I was trying to do the price calculation based on the price levels based on the GAN method, I saw that 1521 was a good spot for it to either retrace a couple of price cycles down, or if it breezes through it, then it will head into 1700s.
Okay.
Because as you know, GAN does price cycles in certain numbers. So this was a crucial number. It had done 6 cycles. So either you move down to 4 or move down to 10.
Do you use a GAN wheel?
How
do you calculate, or how do you calculate?
Yeah, those yes, those angles 45, 90, 360, 180, 260.
Okay.
So those intermittent numbers, when they come in, they generally are either 45 degree or 90 degrees. And then that's where, something like 3025, right? We said that's a GAN level and price should react there, but he has moved more than that a little bit. So that's what I've seen. Price always jumps 25% than what the GAN number is. Just to the next level, maybe to bull trap. Yeah.
Okay.
To bull trap or bear trap. I mean, downside, it would be a bear trap.
Okay.
But then the beauty is it waits for XPX to go to that level as well.
Okay.
So,
all right. So, you know what my favorite WD GAN statement is? If you don't learn how to change your mind, you won't have any change left.
yes.
Okay. So learning how to change your mind, what would turn you bearish, gold, at this? Because if you look at, say, the monthly chart on gold, we really,
see?
okay, so we're really not that much above the 50% retracement. I think was 1480. And look at the month we're having so far. I mean, when you look at it from 1900 down to 1050, couldn't this be a bear market rally?
Yes, definitely. Because see, right now we are at 50%. See, it's right at 50%.
Right.
Yeah,
Okay.
and it's looking to see what it wants to do.
Okay.
And looks a little bit extended here. The weekly is extended, so maybe, you know, take a month's rest or so, and then
Okay.
push up into 1600, 1625. But if it pushes above 1521, I think it may do very well do this 786, 742, 1760 or so. 1765 was the next number. So somewhere in this range, somewhere here, between 618 to here, it can do that easily.
Do you
But
think?
yeah,
Yeah.
sorry.
Do you think that the S&Ps and the gold kind of got a lift on that last big sell-off in S&Ps on the trade war data? Do you think that it's being used as a hedge when the market looks bad, or is it possible if the market really gets bad that people sell everything and they have profits in gold, that it may even create some liquidation pressure in gold?
That could be, but again, I generally don't trade gold that much. I do look
Okay.
at the chart. So I am not so sure about whether this relationship is going hand in hand, because there were
Okay.
days when both were up.
You're right.
So
Yeah.
then, yeah, and since I don't look at gold all the time, I don't say how closely they are married or how much love they have in
Right.
between or hate they have in between to
Yeah.
do that. And then there is currencies also. So to me, all this correlation, sometimes it's in sync, sometimes it's totally out of sync. So
Yeah. They work till they stop.
yeah, so I won't comment into going into liquidation or what people are doing. The only thing what, you know, the Twitter world says is, oh, this is bullish, that is bullish, and the only thing I see is, okay, hit my level, it's doing this. That's all I see.
Okay. So now that you're working with traders and helping them break into the market, what would you consider one of the more important things that you teach?
Discipline.
Okay. And how
Yes,
do you teach someone discipline?
uh, you know, people get, I mean, as a human being, you get really, really enthusiastic, because once you make some money, I know I have people there who says, you know, if they've made some money, you know, $100, a few $100 in a trade, depending on how many contracts they bought, it's like, oh, you can do it and it's a success. So they immediately want to jump into the next trade. Right.
Right.
So one of the things to teach is patience. Wait for the setup and then, you know, start it. And plus taking profits. I'm just trying to teach them, or not teach them, I mean, because I have to teach myself as well all the time, you know, take profits in parts, right?
Okay.
Either in 1/3 or in halves, so that at least you have, you know, take off some risk already off the table versus trying to get all X number of contracts at the same time.
Yeah, not try to be all in, all out at the same time. I think that's
Yes.
a
Yeah.
great mentoring,
Yes.
Nargis, and I wish you continued success in paying it forward to people, and I hope they start thanking you for the hard work, because for you to have gained wisdom, you had to go through a lot
Yes. I
to
mean,
do it.
yes, and I mean, losses are part of life, and I have done
Yeah.
blunders of my own,
Yes.
and
Oh,
and I'm still trying to avoid them.
okay, so what's the best way for people to get in touch with you? Would it be via Twitter
Via
at
Twitter, yeah.
Nargis 007s?
Yes, yes,
That's it?
Nargis 007, yes.
Okay, all right. So there she is.
Yeah,
And there's someone that is you could learn some things from. At the minimum, I recommend you follow Nargis and look at the charts that she shares. And I want to thank you for coming here today, Nargis, and
thanks, Dale.
sharing your trading experiences with us and some of the views you have in the market.
You know, Dale, sometimes I think, like, you know, is it worth doing sitting alone in a room in a chair and, you know, missing my job? Some days I do that, missing the salary and all that. Then I realize, like, you know, oh, I get interviewed, Dale calls me and some other good traders calls me. So, you know, I am doing something right for me to being recognized in so much early in the game, when people have put in so many years and gained so many experience, right?
Yeah,
So yeah, that
yeah.
helps, you know, that's a good motivation I get from you and other
Well,
people. So
I love to lift others up, and you know what, Nargis? The cream always rises to the top.
yes. Oh.
So thank
So
you
are you
so
saying
much.
Are you saying I'm the cream?
You're the cream. You're the cream of the crop on Twitter. How
Thank
about
you.
that?
No,
So
thank you. I much
yeah,
appreciated
your
actually. And
husband
thanks
is
to,
not your only fan.
oh yeah, my husband.
He's
He's
your
a good
number
guy.
one fan, but you have many
Yes.
fans, include me as one, my Trading Warriors
I know.
sister.
Yeah, thank you so much, Dale, and have a good day. And thanks everyone who follows me, puts in a good word, and I really, really appreciate it.
Okay, good hunting, Nargis. Thank you,
Thank you.
thank you very much. That's a wrap, everyone. I'll see everyone for Turnaround Tuesday. Remember, don't just count your pips, count your blessings, and we'll see everyone for Turnaround Tuesday. Adios. Take it easy. You're welcome, DJ. You're welcome, Shabab. Stavros, see ya. Lena, see ya.